Hello everybody, welcome to the Trade Pro Foundations course. This is George from Trade Pro Academy. We've got a really exciting session for you tonight, and tonight is actually the beginning of the end. It's the beginning of some greatness for you and yourself and your finances. The Trade Pro Foundations course is a really exciting offering. It's our flagship course, and really we take a lot of pride and a lot of work has gone into this. And you guys get a chance to experience the first eight lessons for absolutely free. Get a chance to see what it's all about. It's a complete course. You're in it for the long haul, and honestly, I could say that this is one of the most exhilarating, one of the most exciting careers that you can ever fulfill or ever run across is trading. All right, so your transformation to a trade pro begins today. There's a lot of exciting steps. It is a journey. All right, it's an exhilarating, exciting, and lucrative career. All right, it's the best thing in the entire world. It's trading. It's exploded since the early 2000s, and I've witnessed all of this firsthand. I've been around since the very first days of online trading, and this opportunity that we present to you has the power to change your life drastically. All right, not only financially, but in many other areas as well. If you learn how to be a balanced, well-disciplined trader, you learn how to be a better person overall. I know that's a deep statement. It's a really deep statement for the first 2 to 3 minutes of a webinar, but I promise you, you will see the light and you will understand why I made that bold, bold promise to each and every one of you. All right, so the traits of a successful trader really empower you to be a successful person as well. So I really do believe that deeply. All right, so what's so exciting about the Foundations course? What's so exciting about trading? What's so exciting about the direction we're headed? Well, I'll tell you this. All right, what is the most fulfilling dream job you could ever picture having? All right, well, obviously it's something that makes you lots of money. That's key. That's number one right there. Also, it's something that gives you a lot of time, right? So it doesn't take as much time. You can make a lot of money, and isn't that the dream job that will set you free to your financial and mental freedom, right? Those are the two variables usually that are a combination of in order to give you that opportunity. Well, welcome to trading. All right, you can have lots of money. You could spend less time earning that money, and you could introduce yourself to financial freedom. You can have all three, ladies and gentlemen. That's what we're going to talk about tonight. All right? It's not easy. Nobody said it's easy. It's not going to be something that happens overnight. But if you commit yourself to this as a profession, as a career, well, there's a lot of things waiting for you on the other end. All right? All it takes is your buy-in, your commitment, and your energy. Okay, guys, everyone looks at the financial markets and trading stocks and Wall Street, you know, as if though it's out of their reach. I always hear excuses. Oh, I'm not smart enough. I don't know enough. All right, well, they're not out of your reach. They are accessible to you. Repeat after me. I can do this. I can do whatever I want. I can trade. It's not just for a certain few people. Today, more than ever, it's available to everyone, to all types of people. If you have the interest, if you have the drive and the passion, you've come to the right place. All right, so here's some of the common excuses that I hear about trading through my years of doing this. To be successful, here are some things that you do not need. All right, you don't need a lot of time. You can do this with just 2 webinars a week. All right, that's a total of 3 hours in an entire week. So how would you like that? A 3-hour work week. All right, you don't need a lot of money. That is one of the biggest misconceptions. Oh, well, I don't have enough money to trade. Well, whatever you got is enough. And if you don't, and if you have a plan, you're going to save that up. You can overcome that objection. It's an easy one. All right, you also don't need to take an enormous amount of risk. I know a lot of people have a synonym or this picture in their mind that traders are risk takers and gamblers. Well, yes, we are risk takers, but we're calculated risk takers. All right, ladies and gentlemen, you jumping on your car or on the bus on your way to work, you're taking a risk, whether you know it or not. So you don't have to take enormous risk. In fact, you can stomach it. It's within your risk tolerance. Those people that say trading is risky, oh, you're going to lose all your money, they're doing it wrong. All right. In fact, one of the most important things we do as traders, we identify and manage that risk. All right. So it's very important. That's one of the objections I hear. All right. I'll tell you what you do need, however. You do need a lot of commitment and you have to take action. Without doing anything, you get nothing. That's a simple formula I've learned many times in my life, and I'm going to pass that on to you. All right. And really, when you think about trading, online trading in the financial markets, trading stocks, buying stocks, selling stocks, what are you thinking? As a career, it looks something like this, don't it? All right? This is what you see. You say, holy jeez, I don't want to do that. That doesn't look exciting to me. All right, well, I'm going to tell you this. One of my best and most profitable trades in my entire trading history happened right here. I took a picture of it. All right, guys? This is it. This is a beach in Greece, Vurvuru. That is what it's called. One of the most exciting trades that happened right here. This is your office view. This is where you can be. Anywhere where there's internet, anywhere where there's a satellite connection, you can do it. You can make money from there. All right? What do you need? You need somebody that's passionate to teach you about this. You need somebody who's done it before, who's successful at doing it. All right? And somebody who could take you through the journey, who's got an honest initiative and just wants to help you out. That's me. So let me tell you a little bit about myself, why you should go with me. A lot of people say, hey, George, you look young in that picture. I'm going to give you guys a secret to looking young. Take a picture of yourself a long time ago, and you hang on to that picture, and you will never age, my friends. So, yeah, I look young, but you know what? That's a really old picture. You need a great instructor. This is me. I'm here for you. You need a practitioner as well as a passionate educator, all right? So thank you for choosing me. I'm going to take you through this journey, but first, let me tell you my story. How did I start trading? I was introduced to currency trading by my father at the tender age of 16, all right? And then I was like, you know what? This is for me. This is what I like doing. He said, do you want me to give you allowance, or do you want me to show you how to make allowance? And obviously I said, show me how to do it. A year later, I started writing some trading strategies, started doing demo trading in foreign exchange. The dream was born, been going full force, and I haven't looked back since. All right. I also went to school for doing some engineering, did automation and robotics. All right. Spent 6 hours a day in the library studying hard. But I wasn't studying robotics. I was studying technical analysis and trading Forex. All right, guys. So what I managed to do was make one of the best decisions of my life to leave engineering and to go into finance, take up the career, and continue trading and pursuing my dream. All right. It's done me well since. That's my indirect path into finance. Spend more time studying about trading during my hours in school. So there you go. All right, what else do I have? I have over 12 years of trading experience myself personally in equity. I have trading experience in options. I've done Forex. I've done futures. All right, I've learned through the school of hard knocks, and I could save you a lot of time and money. All right, you always need to have somebody who's a mentor, who's somebody who's there for you, who's gone through the journey that could help identify some of the challenges and help you overcome them directly. All right, I've done mentorship with a lot of students that have gone on to be extremely successful. So there you have it. All right. Also, one of the key things I have for you is the burning desire to help you out. Anyone that knows me, that's worked with me, knows I'll go a mile and a half. I'll go the extra distance. I'll go as far as I need to make sure that you guys are satisfied and you're on the right path. Nothing would make me more happy than for you and I to sit down, have dinner, and you tell me that your life is going great. All right, guys? I know it sounds cheesy almost, but that's it. That's my core drive. And how did I start this entire business? Well, I'll tell you why. A lot of people came up to me and say, hey, George, you trade, right? What do you do? Well, what should I buy? They always tell me that. Hey, George, give me a hot tip. And I always say, you know what? I only give tips to waiters and waitresses. You don't need a hot tip. What you need to do is not what should I buy, but how do I decide what to buy? Those are the key questions you need to ask. When I should buy it, how I should buy it, what I should buy. TradePro Academy is the answer to all of that, right? So there's a little bit about me. Passionate educator, 12 years experience, done financial planning, coached thousands of financial advisors, worked for one of the big institutions, the big six in Canada in the trading department, all right? Done Forex, done options, done commodities, I've done futures. I've been there, done that. And I've put it all together into 24 interactive webinars for you to fast track your way to be the same level that I've gotten through. All right, I'm going to tell you one of these things. Trading is a lot more of an art than it is a discipline. A lot of people see it and say, you know, I'm going to find a hard cut way, or you're going to see it advertised somewhere on a website that says find out how to make $1 trillion in split second. All right, guys, that's not possible. All right, trading is an art. It will take you some time to get used to it. It'll take you some time to untap your potential. The most important thing is you don't give up and you stay on the journey. I'll show you everything you need to know right here. All you got to do is come in the webinars, but you also have to apply it, take it one step further than you see, and put the pedal to the metal. Okay, here's our model. How do we teach you? What do we do with TradePro Academy? Well, it's a 4-step model that maximizes your comprehension and retention. I want you to walk away and understand this material and never forget it. All right, a lot of these great educational courses teach you everything you need to know, but where the money is made. That's the only thing. All right, is learning the same as doing? It is not. All right, a lot of our competitors focus on education. They will say, here is an education-based course, take it, enjoy it, and yeah, go off on the markets by yourself. Well, that's really the first step only. Our competitors' work is our only first step. Think about that. Then we go into simulation. So in every class, we'll do a piece of each and every one of these steps along the way. We're going to do education. We're going to talk about the material 50 to 55, sometimes to 60 minutes. So about an hour, and then we do 30 minutes of simulation, investigating the results we get, and then talking about how we're going to apply it to the live markets. All right, so we look at the educational material, we also apply it on the charts, we look at live markets, we trade together. Starting in lesson 3, we're going to start to pick options. I know you're going to be that good by then. You didn't even think you were going to be that good. But level 3 to level 4, we're going to start trading options in a virtual account. You're going to be able to track your trades, and you are going to be putting these trades in. That's a whole lot more than education. All right, guys? To get to the top, education is the bare minimum. It is the foundation, but it is not everything. So you're getting a complete model here. That's what we're going to teach you. Take you front to end. We're going to develop you to the trader that we know we can become. All right, first and foremost, let's take a tour. It's worth mentioning and noticing how you're going to use and interact with our website. All right, so I know that the live webinars are great and sometimes you won't be able to make them. That's fine. That right there is life. I'm going to show you in just one brief moment here how to access the archives, because this is very important. For the entire level 1, for the first level, I'm going to send you guys the links the night before. I know tonight was a little bit of a challenge and we got ourselves into some trouble with that link. Basically what happened was we weren't able to send it out. All right, so last minute we're scrambling to send the people the links, and we're sorry about that. We're going to get more advanced notice going forward. So it's going to run Mondays and Wednesdays, 10 to 11:30 p.m. We're going to spend the first hour lecturing, the last 30 minutes actually applying that stuff to the charts, learning and drawing from our experiences and how that's going to help us become better traders. All right, and our website is your tool to get some information and follow up. So I'm going to show you what it includes. I'm going to go to the website right now. Signing in, bear with me here. Here we are. All right, so you're going to go to the link, TradeProAcademy.com. This is a little bit of a splash page built into the site. You're going to sign up first and foremost. Once you sign in, you go to member area, all right, foundations course, and as a foundations course student, you have access to 3 things. You have access to an archive, quizzes, and you have access to a workbook. All right, these are resources at your disposal. As a level 1 student, as a trial student, you have access to this workbook as well. You can go in, it's a PDF, it loads. This is over a 100-page book showing you and documenting what we're going to be talking about along the way. All right, we also have quizzes. They are right now giving us some trouble, but if you go in and do level 1, lesson 1 quiz after tonight, you have a chance to go in through here, answer the questions, get answers to how you've performed, and that helps you really solidify your knowledge. This is very important. Testing is a huge piece of understanding and comprehension. All right, that's another tool you have at your disposal. In addition to that, you have the archive. So if you could go in through here, you see all the lessons that you're entitled to. Most of you will have level 1 at this point, and you'll have 8 of them. All right, so I will urge you not to go through and watch them forwards, because that could cause you a little bit of confusion. I don't know, some people see level 1 lesson 8, they'll jump to right to the very last one thinking that they can handle it. But take it in sequence. If you miss it, use the archive to catch up, but try not to go ahead. It causes confusion sometimes. All right, so there it is. You have an archive, you have a workbook, you have yourself an opportunity to do some quizzing as well. It's a complete course. We're going to take you far with this. Just stick with the process and stick with us. All right, we also have a blog we post quite regularly on, and if you need to contact us, you could definitely do that. All right, so there you go. There's a website in a jiffy. Wanted to take you through a tour and familiarize you with your new home. Do you guys have any questions? If you have questions, by the way, at any point of this webinar and going forward through the entire Foundations course, I'm here to answer it. All right, plug it into the questions box. I stop regularly. I'm going to address the questions. My job is to make your life easier going through this stuff. Okay, so any questions so far, comments? One of the questions is, are you going to be recording these live webinars and replacing them? The answer is yes. Okay, so for the first level, I'm going to record tonight's webinar and then upload it to the archive. That way, if you miss it, tomorrow you'll be watching the thing you actually missed and not a previous webinar we've done months ago. All right, so that's the answer to your question that you asked. That's a fantastic one. Okay, the archives are accessed, but try to make the live ones. You get a lot more value here in person, live, asking questions and participating. All right, what are we going to talk about in level 1? How are we going to kickstart this whole thing? Tonight we're going to talk about introduction technical analysis. Wednesday we're going to do introduction to equity markets. The following Monday we're going to do support and resistance basics. The following Wednesday, moving averages and Fibonacci. Introduction to options. Look at this. By the 5th lesson, you're going to start talking about options. This is something that the professionals get confused about. All right? So you guys are going to start moving very quickly through this, and it's designed in a way in small steps and progressive steps to make you get through very sophisticated content quickly. That's what this whole course is doing to you. Equity and options trading in lesson 6. We're going to round out some applied market analysis. This is where we spend the entire class looking at all 6 lessons and applying them live. So we're actually trading here and generating results, analyzing them, learning from them, putting the last 6 classes into practice. It's basically what we're doing. Okay, very exciting. We finish level 1, lesson 8 with the trader conditioning system, part 1, and this basically helps develop your psyche. It's not just about knowledge, guys. It's all about conditioning. It's all about discipline. And some of our foundations course students here that are tonight, they're doing a retake, can tell you this. They can attest to it. It's a mental game as much as it is an educational game. All right? I know I'm going to get a bunch of amens on that. In fact, I already have. So there you go. All right, so let's just dive in. The best way to do this stuff is to dive in. When doing this introduction, I thought about motivation, I thought about adding stuff, but the best way to experience this whole thing is to just jump in, talk about what is trading, what is technical analysis, what are we doing here, and let's dive into some key concepts. Okay, you guys ready? You ready to start your journey of learning, earning, performing, and darn it, I don't have a 4th one. None of this is scripted, by the way. A lot of people say, do you write this in a script? No, that I owe it to you to be energetic and live. None of this is right off of paper. Okay, so there you go. Any questions, remember, ask me along the way. We're going to take some pauses through here. We're going to talk about today's market as well, what's been happening in the markets lately, what can be happening. A lot of stuff, guys. Stick with me here. We'll get through it. Okay, so what is technical analysis, first of all? What is technical analysis in trading? This is something you might have heard being mentioned, thrown around. We're going to define it. And it's very important for us, but because when we talk about trading in the financial markets, when we talk about buying stocks and selling stocks, people ask me, when do I buy them? What do I buy? Technical analysis is the answer to this. All right? So basically what technical analysis is, it's a security analysis framework. You'll have analysts in the news saying earnings of a company are doing so-and-so. You'll see cash flow is doing so-and-so, and that's one type of analysis. That's the type of analysis we don't do. We have a different type of analysis that's much more accurate. It predicts the timing as well as it predicts the pricing. We're going to talk about that, all right? So all technical analysis is a way of analyzing stocks and timing of purchases and sales. That's all it is. One of the key things is that it's centered only around 3 variables. There's only 3 things we're going to talk about for the entirety of this whole course. Now, just because I tell them to you doesn't mean that you're done. We're going to expand on them in an exuberant amount of details. 3 variables. Only 3. Memorize them. They're part of the quiz. They'll help you memorize these. The first one is price. Okay? What does that mean? It means that technical analysis measures the price of a stock, the fluctuation up or down. The second key variable of technical analysis is volume. All right, and we're going to talk about and explore volume in level 2, lesson 1 actually, and how it works in a lot more detail. All you need to know is volume is what's taking place in the market and how many people are buying or selling at this certain price. So they work hand in hand. All right, and you're going to see how predictive powers volume actually has. The third thing is time. All right, the third variable is time. The markets could move, but they could also move in a specified amount of time. There's short movements, there's long movements. So using price, volume, and time, you're going to be able to analyze stocks and analyze trades and enter into opportunities that are 75+% accurate. It's that simple. I know it sounds crazy. It's a crazy concept when you add that kind of simplicity, but it's all centered around PVT, price, volume, time. Okay? Well, what is technical analysis then? If it's all just price, volume, and time, why is it so easy? Why isn't everyone rich? Well, here's the thing. There's also a huge psychology or concept and motive inside of the markets. All right, most investors that are unsuccessful investors and unsuccessful traders try to justify the price and volume, all right, rather than allowing it to justify itself. Let me explain that statement. It's very important. How many times have you heard in the media an analyst saying, well, I believe, the stock right now, Apple, they have cash flow and discounted earnings of such and such. So you know what? The price is trading at 600, but it should really be 800 bucks. All right? Have you heard that before? They say, our upside target's 850, let's say, for Apple. Well, I'm sure you hear it. There's a bunch of analysts, and you got to ask yourself, based on what? All right? It's really not a humbling thing to say, hey, I know where the market's going. Let me tell you something right now. No one does. No one. Zero. Zero people. Not I, not anyone you know knows for a fact where the market's going. And if you're an analyst, you probably know even less than you and I. Here's why. They always say, you know what? This is why the price and volume is moving such and such. Whereas us, traders, using technical analysis, we do the exact opposite. We look at volume and we say, hey, volume and price is moving this way, so maybe this is going to follow. That's the difference. We're not anticipating things here. We're using what we see to come to a really conclusion that's highly accurate and precise. That's the difference. All right, we're humble people here. We're not telling you we could predict. We don't have a crystal globe, but we have our tools to give us a high probability move that's likely to happen. That's what technical analysis is. Can't break it down any more simple than that. Any questions? Because it's exciting, because now the question becomes, well, how do you use it to make money? Well, you know what? And what is it? Well, I'll give you a nice little analogy here with the market polygraph. Technical analysis is our market polygraph. And what do we mean when we say this? Whatever the chart is telling us, all right, that's what the market is feeling. And it reflects the sentiment of the people participating in the market. So essentially, when you look at a chart of a stock moving up and down, all right, this reflects whatever's happening. That's the true market sentiment. I want you to get away from saying the price in the future is going to be X. I want you to say this is what's happening today. Therefore, in the next couple of days, this is likely the momentum. This is likely the market sentiment. Will go with it. I don't want you to be a trendsetter. I want you to be a trend follower. That's really what it comes down to when you're trading. And that statement alone has lost people hundreds of thousands of dollars. I guarantee you. All right, never be a trendsetter, be a trend follower in the markets. On Twitter, you can do whatever you like. In the markets, follow the trend, right? Essentially, there's no bluffing. There's no poker faces. There's no lying in this game. If you look at the chart, whatever the price is, that's the raw truth. That's what it's trading at. Based on buyers and sellers, they're agreeing on that one price. All right, it's your market polygraph. Remember that. Well, some of you might be thinking, well, you know what? Geez, George, this doesn't sound very scripted. It doesn't sound very, very I totally butchered that word. See, this is one of the things about the script. You'll catch me slipping on some of these words. There's no methodology. There's no method to this. There's no method. There's no process. There's no set or defined concept of trading. Well, here's the thing. You're right. It's more of a psychological presence in the markets. How many of you realize that when you look at a chart, a stock chart of prices going up or down, what you're actually looking is a psychological map of what the masses of people think? Think about that. It sounds kind of eerie, but when you look at a stock chart, you're seeing thousands of people and their opinions mixed into one price. That's what you're really seeing. All right? Because a stock chart represents human emotions. It represents human tendencies. It represents their insecurities, their fears, their dreams, their aspirations, their hopes. That's what you're seeing in a chart. I know you never thought that was possible, but it is. All right, that's what you're seeing. If everyone's hoping that a price goes up, well, if they pull out their wallet and spend their money, the price will go up. So instead of analyzing a chart and instead of analyzing cash flows and ratios that analysts analyze, what you need to be analyzing is psychology. You need to be analyzing sentiment. You need to be analyzing emotion. And that's what technical analysis does. It's fear, it's greed, it's temperament, it's all on a chart. It's there for you to see. We'll talk about that a little bit later on. All right? So if you're smart enough to figure out that this is a recurring behavioral cycle as humans, then you know that there's exploitable opportunities and very profitable ones at that. All right? I'll give you an example. When was the last time you had a friend text you saying, hey, let's get together for dinner or some drinks, so let's watch the game together. And just before the game started, they canceled. They said, I can't do it anymore. I'm sorry, something came up. 2 weeks later, the same thing happens. Now, on the third week, if they text you saying, I'm coming over to watch the game, what are you going to say? You're going to say, yeah, okay, I've heard this before. You're going to ignore the text. Believe it or not, what you've done is very similar to trading. All right? You've exhibited a recurring behavioral cycle. And if you could understand where the cycle begins, where it ends, you could usually understand what it means. And that's what creates profitable opportunities in the markets. Technical analysis will help you spot fear. It'll help you spot greed, temperament, excitement, fear. You will see a lot of things in there that will shock you, and it all starts with just looking at a chart. It starts and ends by looking at a chart. All right, guys, so you're doing a lot more than looking at just little charts and bars. A lot of people say, well, that must be boring. Well, it's not. It's actually fascinating stuff. Okay? If I had to say it in one simple sentence, I would say markets, trading, stocks, value is entirely dependent on how we think. It's all psychology, right? And we love trends, don't we? Who doesn't love a trend? We all do. Remember the Pogs? Do you guys remember this? One of the most peculiar, interesting things you'll ever see. Expensive paper chips that we used to buy, lay them on the ground, then buy a heavier and more expensive plastic or metal chip and just bash the crap out of them. Remember that? There was a thing to do back in the day. That's a trend. All right, then there was the Tamagotchi and the pet rocks. Remember the pet rocks? It was literally just a rock that you painted and you called it your pet rock. Genius. Genius. I wish I could sell pet rocks nowadays. You cannot. Tamagotchi was the little electronic animal you would care for. And I mean, it's sad, but nowadays I've heard things like mothers playing on their electronic baby game. I think it was Sims 2 actually, 2.0, where they spent so much time in their alternate reality life they let their actual child pass away from a lack of care. All right, remember, as humans, we're very addictive as personalities. We get addicted easily. All right, Facebook, that's another trend. Somebody's going to say, well, Facebook's not a trend. It's one of the best things ever. All right, well, now it is. Remember a little thing called MySpace? What happened to that? All right, it's a trend. All right, the billion-dollar company that makes absolutely nothing and is relying on its trend and social status to gain revenue. All right, one of the things that I love, and it's a quote that I'll bring in from Dennis Gartman. He said, I want to buy companies that produce something that if I drop it on my foot will hurt. All right, there's a little interesting thing for you. Here's another trend, tulips. Dun, dun, dun. I say this one for last because it's a bit of a head scratcher, isn't it? How could this beautiful bouquet of tulips be a trend? Well, there's actually a case study behind this. Let's look at this in a little bit more depth. It's called the Tulip Mania. This occurred in the mid-1600s during the Dutch Golden Age. All right, tulips are very rich in color. They're very different from any other flower in Europe during this time. You got to remember, this is 1600s. They quickly started growing in popularity. All right, the demand started to drive prices up. Because what happens when there is, let's say, 10 flowers and one person seeking these 10 flowers? It's easy to get a flower. If there's 1 million people seeking 10 flowers, they're willing to pay more because there's less quantity, right? So that's what started to drive the price up. Interestingly enough, another variable that makes prices expensive and leads to a lot of mania markets was that supply was limited. A tulip takes 7 to 12 years to grow to a flower from a bulb, all right, from a seed. To turn to the bulb to actually grow 7 to 12 years. So supply is also limited. Demand continued to increase, and guess what happened? Prices skyrocketed. Tulips sold for 10 times the average salary at their height. All right, 10 times. Picture this, the average salary now is around $40,000. All right, so 10 times, guys. 400 grand for one tulip bulb. What do you think happened? What do you guys think happened? Well, one day people woke up and came to their senses. They said, hey, you know what? This is tulip. It's a flower. I don't care if it takes 12 years. It's going to die. It's going to grow. It's going to eventually die. What am I doing? Let me get rid of these flowers while the going's good. And somebody bought them for $390,000. Then another person said, hey, what am I doing? I'm not comfortable with this. I made my money. Let me get out of it. And that was the first economic collapse on record. All right? This is the mid 1600s during the Dutch Golden Age. This is the first rise, boom, and bust situation. This is what the chart looked like, guys. Essentially, it took years of the price to get driven up. It was madness. And the person, there's always one sucker that buys it at the absolute highest price. There's always one person. Always. Don't be that person, all right? And then the free fall started, and it pretty much ended up where it was. So a fortune was made, but also a fortune is lost. All right? I'm getting at something here. Guess what it's going to be? I think you've seen this before. Remember 2008? Well, there's a lot of similarities between the tulip bulbs, believe it or not, as crazy it sounds, flowers in 2008 market crash. George, you're crazy. No, I'm not. Right? In 2001, the story was actually pretty similar as well. The tech bubble crash. All right? It was a dot-com bubble, not tulips. Right? But anything with a .com after the domain was selling for increasingly insane prices. All right? In 2000, people came to their senses. They woke up. The tulip wasn't worth 400,000 anymore. The .com website wasn't worth that much. Bam, prices dropped. Wiped out trillions of dollars in a matter of days. 2008, the same thing happened. This time it was the housing price. All right, speculation rode the markets higher until October of 2008. Word got around that most people who had a mortgage were not able to pay it off unless they won the lottery. If you're in a mortgage situation that you cannot pay off, you would hate to be that lender of that person, wouldn't you? So people woke up once again one day, and as quickly as prices rose, they collapsed. The market tanked. Wiped out again trillions of dollars worth of equity. Devastated investors. It erased 10 full years of market gains. All right? But at the end of the day, what happened? There was a rally, like the tulips. There was a rally. Everyone jumped on board. The public started to jump in and push this thing higher, followed by what? Regression to the mean. That's the collapse. Here's 2008. All right, here's 2001. Here's 2008. Prices go up, it dropped. Down here, people think the world is coming to an end, and then prices start going up. Then it drops again. All right? Bubbles happen. That's one of the first things you have to understand about the market. Don't look at the market crash as something that would have wiped you out. Look at the market crash as a massive opportunity for you to have made money. Because you could make money on the upside, you could make money on the downside as well. We'll talk about that. All right? Market crashes happen. If you can time them, they're one of the most profitable things you could ever experience in your life. At the end of the day, no matter where prices are, they always regress to the mean. They return back to their average. Okay? Is that interesting stuff to you guys? Did you know that tulip bulbs had something to do with the 2008 market crash? Well, they do. We're going to talk about this. Okay? Now, here's why it's important for you to realize that timing has a really big key as well in this. All right, a lot of investors say, I want to buy and hold it forever. Like Warren Buffett says, my favorite time to hold is forever. Well, you know what? He's been successful with his investing, but the landscape has changed. All right, it's changed dramatically since he went in and did that. So for a trader, the number one important thing is what? Is it to make money? Do you guys think making money is the number one important thing for a trader? Say yes if you believe so, or no. Had to get a quick drink, had to ask a question. A few people say yes, a few people say no. Well, it's the most important thing, but also it's not. The most important thing is not to lose money. All right? Not losing money is the first basis you have to cover for yourself. All right, and I'm going to show you why, guys. I know that losing money is what frustrates a lot of people and leads them from seeing a marketplace as a speculative or a casino vehicle. A lot of people that say, you know what, this place is just a gamble, you can't make money trading, are people who got burned. And I'm going to show you why I feel so bad. It's the harsh reality of losing. Look at this. If you lose 10% of your account balance, you have to make 11% to actually recover back to break even or 100. If you lose 50% of your account balance, if you lose half of your value, you've got to double. You've got to double your balance to get back, to claw yourself out of that hole and be at break even. All right? How do you think that affects your psychology? It's really damaging to know you lost half and now you've got to double that to get back. Not good. That's why the most important thing is to control your loss, understand that it's going to happen as a trader, understand how to manage it, and understand tools and techniques for you to eliminate and minimize it as much as possible. The one thing I could tell you, if there's one thing I could pass on to you for free that should stick with you for the rest of your life, the amateurs, the rookies that come into this game that are greedy, that are hungry, they're looking for gains. All right? Amateurs look for gains. Trade professionals look to identify, mitigate, and eliminate risk. All right? A lot of the times when I close out a trade, I say, oh, I don't even know how much money I made. It doesn't really matter because I know how much risk I took for it, and I was okay with it. I've identified it, and I've eliminated that risk. Don't be blinded by the gains. They only come once you start identifying your losses. Always worry about the downside. This is why. Remember this chart. Tattoo this on yourself. But don't hold me accountable when your wife sees it and starts yelling at you. Or your husband. Whatever it might be. Just remember, this information is for educational purposes only. TradePro Academy cannot be sued for tattoo recommendations. There you go. Disclaimer made. And I don't mean to flex muscles here and tell you guys anything and take a cocky approach. It's true. I made money in 2008 applying technical analysis. All right? Because I practice what I preach and I believe in what I do. 2008 was one of the biggest opportunities. You may not believe this, but a lot more people got rich in 2008 than people leading up to 2008. What do we need as traders to make money? Do we need prices to go up? No. Do we need prices to go down? No. All we need prices to do is move. And here's something I'm going to tell you as well. Even if they do not move, there's still ways to make money with trading options. And you're going to find out in level 5. Lesson 5, rather. Okay? All you got to do is you need to move. I made money in 2008 because your chart reflects extreme sentiment. You can see that. You can identify it. Technical analysis will give you that signal before that storm comes in. I promise you. When you see a crash happening, you're going to see it long before everyone else finds himself in the middle of it. I'll give you a little heads up right now. It looks like we might be in the beginning of a drop in prices in equity markets coming up in the next couple months. People don't see it. People are euphoric right now. They're so happy the markets have gone up. But TradePro Academy prepares you to spot profitable opportunities using analysis, using technicals, and using a combination of resilience, discipline, and psychology. Okay, guys? Markets do not need to move up for your account balance to grow. Accept that. All right? Stay patient through this process, and the results will speak for themselves. They're going to come, I promise you. But repeat that statement. Markets do not need to move up for you to make money. One of the biggest misconceptions. I see today as a big, massive red day, and I was so happy. Why? Well, because I'm in the right trade. That's why. Focus on getting into the right trade. That's what you need to be doing. Okay? What's the difference between a trader and investor? There's a lot of differences. Traders move in and out of positions in favor of momentum. Basically, a trader is somebody who holds a position for several days, several months. All right? I'm sorry, this is the only real metaphor that I can think of at the moment. Traders basically don't fall in love. They don't get married. They look for a fling for the night. They buy a stock, they ride it until the momentum's good, and then they dump it. Think about that. It's kind of like having a car. You buy a brand new car, you ride it out, and once you're tired of it, once things start breaking down, you're like, I'll toss it off to somebody else who wants to be an investor in this vehicle. You know, that's how it is, unfortunately. That's what traders do. They profit on the upswing and on the downswing. When prices go up, they make money. When prices go down, they make money. They can identify these precise turning points. Laser precision, too, very, very accurately. For those of you that are in the Foundations course that are also in Market Analysis Live, we prove that this week. Okay? Investors buy and they hold forever. That's the difference. All right? They ride through these redundant and predictable market cycles that traders cringe during, but investors just hold. They ride out the storm in beliefs that it's going to go up forever. Okay? Well, Buffett's the most famous example of this. But the downside is you're at the mercy of the market. Your only return is often dividends if the company pays them. Oftentimes it's nothing. If they don't pay you dividends, you're sitting there waiting for stock price to get up. And guess who has your money? The company. All right? The company that charges you so much money for their product controls you with your deposit. So let me tell you how it works. Let me show you something with the psychology of an investor. Here's what an investor does. He says, oh my goodness, in 1994, actually it's probably a little bit later, 1998, let's say, This stock looked great, whatever the stock is. I'm going to buy it. Okay, and then went up. And up here, they felt like a millionaire. They were taking their wives, kids, children, children's friends, pets, anything else they could find on the street on vacation because they had money. Then the price dropped. And the psychology down here, the mood changed, didn't it? Because now they said, well, just a few years ago, I had this much money. This was my height. I was at the height of my trade. Now I'm back to where I bought. All right? So you've lost a lot of time. Look, this is almost 10 years later. Then the price goes up and it says, haha, I'm back to vacation mode. Then it drops. All right? Then it goes up. Then it drops. And at the end of the day, when you get to this point, you've had enough. You say, market's just gambling. Nobody knows anything. I can't stand this. All I've really had is 3 heart attacks and no profits down here. And this is 10 plus years. Right? That's what you get for buying and holding. The markets have changed. All right, guys? From the days that Warren Buffett got rich to today, the markets have changed. Here's what a trader does. Trader says, hey, you know what? It's moving off of this support line, starting to build some momentum. I like it. I'm going to jump in. Oh, it looks like it's topping out. You have yourself some bearish candles. Momentum starting to turn. I'm going to jump out. And in fact, you know what? Not only am I going to jump out, I'm going to actually ride the negative swing. You get in. You see that it's turning. You see that volume starting to get excited and happy. Well, you jump back in. Basically, in the span of a trader or an investor rather, not making zero, you're making one profitable trade, 2, 3, 4, 5 plus. 5 to 1 in this example, guys. That's what we're talking about. That's why it's important to ride momentum. All right, let's be honest. You have 2 friends that show up at your door. You have $100,000 and you have to invest in one of them, okay? Or the world's going to end. I know it's probably not a likely scenario. One of your friends says, you know what, man, I know I've been here before. I borrowed a lot of money from you. I need a little bit more. You know, I know it went up to $1 million, your investment dropped to 0, went back up, but I just need a little bit more money. Or the guy that comes to you and says, you know what, pal, to me, it doesn't matter. Let me borrow the money. I'll return it to you next couple of days. I've done this before. I've always gave you returns. You're going to go with friend number 2, aren't you? You're not going to trust the guy who's been burned, who's waded through subtleties, who's taken a beating. Why would you do that? You would trust the guy who goes with the momentum, and when times change, they get out. All right? If you're sitting in a boiling pot of water and they turn up the heat on you, you're going to jump out. That's one of my best analogies. You're going to jump out. So that's why we're traders. We jump out. When things get hot, we get out. When things are good, we jump in. That's the difference. All right, so let's start the learning process. Now you know what technical analysis is. Now you know that trading is for you. You know that you don't have to be in an office. You know that you've come to the right place. All right, you know that trading and investors differ. Now you need to know what to actually do. When do you buy a stock? That's one of the questions we need to answer. Well, what do we say is the polygraph for the markets? What is a polygraph? The chart, right? Remember? We just said that a couple slides ago. We said the chart is your market polygraph. It tells you if people are lying or not. Well, in terms of a chart, and speaking of charts, there's actually 3 types. Okay? We mentioned that it's a polygraph. It's a machine showing who's lying, who's not. It shows true investor sentiment. It shows psychology. It's an important tool. All right? So they give us a great visual representation. They help us spot patterns, recurrences, and they help us really make money. At the end of the day, the chart is the trader's best friend. Okay? That's important for you to understand. There's 3 types. All right? There's a line chart, there's a bar chart, and there's also the candlestick chart. Okay? Don't worry about reading all that because I'm going to take you through each one individually. What is the line chart? Well, it's a single data point. It's a simple layout, but it shows you very little information. You're probably used to seeing this in the media, in the news. Here's a stock chart of AAPL. How has the company performed? Well, all it gives you is one little point. It doesn't really tell you much. In technical analysis, the line chart is one of the least relied upon, one of the least useful tools that you could ever have of the chart types. Now, here's the question. If it's the least useful, the least informative, why do media outlets, why do analysts, why does everyone out there use it the most? You ask yourself that question. When you get an answer, send me an email because I don't know. Here's what it looks like on a stock. Okay, here it is. It shows you very rudimentary the price. It honestly doesn't look like much. It's just a line. There's a second type of chart that gets a little more interesting. It's called the bar chart. All right. Well, now for every single day that we have, instead of having just one little point on a line, what we have is 4 points of data. We have 4 times as much information. Okay, so this represents one day. For example, today is Monday. Still, right? Yes, it is. Today is Monday. So the Monday candle would have looked like this, let's suppose. This is one full day of trading. And the 4 points of data are the open, okay, the opening price of a certain security, the high point where it's traded up to, the low point, how low it's traded, and the close. Okay, let me ask you this. In this day, day number 1, has the price gone up or down? I need you guys to answer this. It tells me you're following. Has the price gone up or down? If this was Apple, let's say. Apple day 1. Yeah, exactly. The price has gone up, right? Up, up, up. Because the close is higher than the open. All right, so do you see how right away this gives you more information than this? Remember, the line chart is just 1 point. You should, because it's a huge difference. Now, if the opening price is higher than the closing price, it's a down day. Okay? Down. Prices have gone down. Doesn't matter what the low and the high were, it's all about the close. This is like buying a car, or selling a car rather. You're saying, my opening bid for selling this car is $5,000. Somebody comes in and says, I'll give you 20 cents. You proceed to slap them. Just kidding. But you reject that offer and you say, you know what, I don't like that offer. I'm going to make you a counter offer. And then you guys close the deal, the bargaining, at let's say 2,000. Sure, you got cheated, a couple grand. You wanted to get 5,000, but you didn't get 20 cents either. The close and the open are what's actually happened. This is the traction. Okay, it's the difference, the net change in a day. Well, is there another type of chart that'll help us? There is, but before we get there, I want to ask you one more question, because I get to ask you guys a lot of questions. That's what I do. It's my specialty, really, is questioning you. All right, here's a bar chart. Why is it a bar chart? By the way, it looks like a bar. That's why. So I want to ask you which bar is more bullish. Now, you're going to ask me, what does bullish mean? Now, this is the perfect time to explain to you. If prices are going up, they are called bullish. Bullish means prices are increasing. If prices are dropping or decreasing, this is called bearish. You're going to ask me why. Why do people like animals and the bulls or the bears in specific? Well, think of it this way. The bull knocks you up, hits you with the horns and knocks you into the air, and the bear tackles you down. Just remember it that way. Okay, there's a whole bunch of theories. That's the simplest, but everyone that trades in their grandmother's brother's cousin's uncle uses this terminology. So bullish means up, bearish means down. Okay? So we've introduced 2 new terms to you tonight. So then if that's the case, let me ask you a question. Which one is more bullish? Which one has gone higher? Number 1 or number 2? Number 2, exactly. Number 2 is far more bullish. Here's why. Because the close is much higher than the open. We just covered this. Now do you understand why it's so important for you to look at the bar chart over the line chart? Okay, because I know the line chart's simple, but simple isn't always the best. Here's what it looks like on an actual chart. So if you were to open up a brokerage account, if you were to go to stockcharts.com, freecharts.com, this is what you'll see. It's a bar chart. It shows you an open, a close, a high, and a low for every single day. Each one of these is a day. It's important to know that. Isn't that interesting? Well, if we were to color code these things, what would happen, somebody might ask? Well, you get something called the candlestick. It shows you more information than the bar chart. So line chart shows you nothing pretty much, but the closing price. Bar chart shows you open, high, low, and close. And the candlestick, well, it shows you a coded body. It's color coded as well. Look at this. Who thought they were going to give up their coloring books when they were 2 years old? We're back to color coding shapes and shading them in, all right? If the open and the close, if the close is open, if the close is higher than the open, that's bullish, right? So we color coded green. Green means money. That's good. Alternatively, some people leave their candles white, and I'm going to show you. That's how I do it. All right, if the close is lower than the open, it's red. So basically what it does is it takes a bar chart. Let me go back. Takes a bar chart and basically boxes it in. That's all it's doing. All right, boxes it in. Do you see that? That's all it is. And then it shades it. Very important. I'm going to tell you why candlesticks are so often used by the professionals, so often overlooked by people who are just starting out. Why? Because they look confusing. There's too much stuff to look at. That helps us, guys. This helps us show psychology in these candles. Remember that. Always look at candlesticks. That should be something you jot down. When you're looking at a chart, make sure you're looking at a candlestick chart. Okay, and here's why. Look how much more informative it looks on a chart. All right, why? What do we know now? Well, we know that the price opened here and closed down here. Right? So what that tells us is the sellers came in, they took control very quickly, and they ruled the day. That's the sentiment. That's the psychology. It's a selling day. So why would you buy in that day? You wouldn't. You should not. All right? So that's what we're going to teach you here next, how do candlesticks work. All right, so it's about time I give you something for free. It's a strategy. This is one of the strategies that has an amazing predictive power, amazing accuracy when you're trading. It's called the basic trendline strategy. Here it is. Here's how it works. You look at a chart. What chart are we looking at? We're looking at the candlestick chart, remember? We look at it, and all we're doing is drawing a line. It's almost comical, but it's not. All right, so a chart line that connects two high or low points is what's called a trend line. Now here, let me show you an example. Okay, so you have a stock price doing this. This is what it looks like. I know you're going to say, well, you're drawing a line chart. Well, I just don't have the time to draw you a bunch of candlesticks. But here it is. Let's say it's doing this in little candlestick patterns up and down. And you're saying, can this line connect at least 2 points, low points? Well, it can. Look, 1, 2. Draw the line. Technical analysis is all about line drawing and looking at supply and demand levels. We're going to talk about a lot about that in the course to come. All right, so there you go. Draw the two points. That's the first step. Okay. So here's how it goes. There's 2 points to a line and 3 points to a trend. And trend lines define the parameters. I'm going to explain this to you. All right, let's see it. Let's see it in action, guys. This is the best way it's explained through a demonstration. So do you see 3 points that we can connect? I do. Do you see that? 1, 2, 3. In fact, it's almost 4. Do you guys see that? Okay, so 2 points is just a line, but once you get a third point, it officially, the third point makes it a trend. Ooh, now we have definition. 2 points is a line, the third point is a trend. It has to be a straight line. For example, you can't draw it like this. You can't be like, oh yeah, look at this, George, I drew a line. All right, you can't do that. So then what do? Here's what we do. 1, 2, 3, draw the line. And we say the following. When it touches the support line, okay, when it touches support, you buy. This is your buy line. So right now, what do we do, guys? Should we buy or should we sell? We buy, okay? We buy the stock. That's the rule. All right, so a few days pass, and the trend line now becomes, we got to draw it straight. That's one of the primary things. 1, 2, we have these 4 points. Isn't it a good thing that we bought at this trend line? Well, you always want to get into the trend. The trend's moving in your direction. This is where you buy. This is the buy line. When do you sell? You sell when the price breaks below this trend line. Here's what I mean. Okay, if you draw it again, let's try this one. Sorry, I'm not for some reason trend lines seem to be my kryptonite here. So 1, 2, 3, 4. All right, we bought here, we got out here. Yes, it's a small gain, but it's a high probability trade. You're going to make money. You're going to make money 75% of the time if you do this. All right, so is it that simple? Is that all there is to trading, the technical analysis? No. All right, there's a whole bunch more that you're going to learn. But when it hits the support line, you sell. And you're going to ask, well, I want to hold it. I got in here, I bought, I want to hold this trade. Well, guys, this is what happens when the trend line's broken. The market goes down. All right, so I'm going to teach you how to identify these trend lines, how to draw them, what they mean, when to trade, when to get in, when to get out. There's a lot of things you have to do in order to trade profitably. It's not that easy. But there it is. I just gave you a free and a very effective trendline strategy. If you can connect 3 points, by the time it hits the third one, you can buy. Go ahead, buy. up it goes. And we're going to demonstrate that in just 1 minute. Okay, so let me wrap up tonight's lesson because we are towards the end of the part where we're going to talk about the material. Now we're going to switch to the program that we use to look at charts for specific stocks. I want you guys to think of a few symbols of companies that you like, or think of some companies you like. Let me know and we'll look at the chart. All right, so in summary, there's 3 variables to technical analysis. What are they? Price, there's volume, and there's time. That's the 3. All right. What's the difference between a trader and an investor? Well, a trader rides out momentum, and an investor just buys and holds forever. They hold till the day they die, whereas the trader holds in favor of that momentum. All right, and that's very important. What are the 3 types of charts? Number 1 is a line chart, number 2 is a bar chart, and number 3 is a candle chart. Line chart is the least useful. It's the most used on analyst reports and on the media. That tells you something right away. They're not helping you. Bar chart shows you 4 points of information, whereas line chart only shows you 1, and candle color codes it, makes it 5 points of information. It gives you most amount of info and is the most useful, and it tells you what the sentiment is. That's why it's important. Okay, guys? And last but not least, we just learned this. There's 2 points to a line, but 3 points to a trend. Once it hits once, that's great. Second time, that's awesome, but that's just a straight line. It doesn't mean anything. When it hits a 3rd time, this confirms your trend. Now you're ready to buy. This is your buy zone on the 3rd hit of the support line. Okay, let's go look at this in action. Do you guys want to see some of this? Okay, I'll show you. If you want to see it, I will show you. Let's look at S&P 500. Actually, sorry, let's look at this because there's no lines. And let me show you an example. So here we go. We start with a line. Here is a stock. Don't worry about what stock it is. That doesn't matter. All right? That's going to shock you when I say that. I always tell people, don't worry about the stock. It doesn't really matter. Just worry about what it's doing. So let's draw a trend line. Do you see 1 point here? Yes. 1, 2. Oh, 2. There's 3. Do you guys agree with this? Do you like this trend line? What should we do now? Let me know. What should we do? Now we've drawn a trend line. It's an official trend because there's 3 points. So what should we do? Give me 1 quick second here. You guys said it, not me. We should buy now because there's a 3rd touch of that. It's no longer a line. It's become a trend. So let's buy. What's going to happen? Well, look at this. Things are looking good. We bought at 150. The stock's now at 153. Hasn't quite broken. Now it's broken. We're done. We got out of this trade. All right, so there's a very successful trade right off the bat. Now let me show you something using this trend line strategy that's just about going to blow your mind. All right, I'm going to show you how you could have made money in a very interesting situation that you would have never associated with making money. So let's go back in time. It's a great software. Somebody asked, what am I using? This is called Trade Navigator, the Gold Edition. It's made by Genesis. Okay, so it's a very great platform. You don't need it quite yet. And if you do, we have an agreement with them where they give you some free access to it. So we'll talk about that. Okay. Just give me 1 second here. I'm just punching something in. We're going to do an exercise that's going to blow your mind. I promise. Okay, start replay. Bam. Here we go. Okay, let's just plot this here. Okay, this looks good. Let's draw a trend line. Okay, from here, 1, 2. Is there a 3rd? Just about, all right? It kind of, sort of, not really. Remember, some of this is a little bit of an art as well. It's not all 100%. So you could call this 1. You could call this 1.5. It just about touched. Here's 2 or 2.5. We're not ready to buy yet, are we? So let's give it a few more days in the simulation. Let's see what happens. Oh, 1 second. Sorry, guys. I did the wrong button here. I got to go instead of 15 minutes, 1 day at a time. There we go. Makes a big difference. Just bear with me one quick moment. Start replay. Whew, there we go. This should work. Okay, remember this trend line we drew? It's back. It's still here. 1, 2, and now we can kind of call it 3. Look, 1. All right, 2, 3. 3 touches. Let's buy. You guys like that? You like that idea? Well, let's hold on for a second first. I want to show you something very interesting. Let's pretend that we bought here. Price is going up. Things are looking good. All right, so remember we bought around 106. Now it's up to 112. So what do? We let the price continue going up. This is our trend line strategy. Remember, we only sell when it breaks below that. Okay, so that 106 is now 117. We made $10 on the stock following this trend line strategy. What do we do now? What do you guys think we should do? Well, what we should do now is start thinking about taking some of those gains, right? We've had a nice jump. I know this trend line's still holding. We can start thinking about taking some of our profits away. Or we could let it continue. Let's follow the strategy. Wait until it breaks the support line. And the support line, by the way, means this line here, our trend line that we've deciphered. Remember, 1 was down here, 2, 3. Look at this. You bought on 3, you're making a lot of money. Like a good trader. Okay, now you're starting to think, well, maybe it's time to take out some of this money. Just want to show you something very important. There's a key moment coming here. Okay, so it's still holding the trend line. We're still behind our trade. All right, now we stop and we ask ourselves, well, how long have we come? How long have we come with this trend line strategy? Look, 1, 2, 3. We bought at 108. It's now 132. Look how much money we made just following such a simple strategy. Amazing. Are you guys amazed? I am. It's a lot of money. So let it just keep going. I want to show you something very key here that's going to happen. Remember, what do we say about this trend line? We're only going to get out of this trade if this trend line's broken, or this line here that's coming up. If price crosses below it, that's going to be our exit strategy at this point, from what little we've learned in one lesson. Okay, so here it goes. It's approaching. All right, it hasn't broken it yet. What do you guys think? Should we still hold the trade or no? The answer is yes, because we're still at that support line. I know it's bouncing up and down, but right now, from what we've learned from the simple one lesson, this is what we got to wait for. Here comes the moment. Let me ask you this. Is the trend line broken? Let me zoom out. I need you guys to answer this. Is it broken? Yes, right? It absolutely has broken. You can see here that you had 1, 2, 3. Now it's traded below. Remember, we buy on the touch and we sell on the break. It's broken below. We get out of this trade. Do you guys realize what you just did? In fact, let me show you this. Let's say, you know what? Since it's broken, not only do I think that this thing is going to go down, I'm going to actually try to profit from this. Why not? If I think it's going to go down, I'm going to try to make some money. And here's how we're going to do it. Okay, we're going to move the order bar here. And we're going to say, let's sell 10 units. Don't worry about what these units mean. Let's just get in this trade. We're in. That means we're now making money on the downside. I'll show you how that works. But for every day that the price goes down, look at this. We made some money. All right. Now we hit play. Let's see what happens. It broke the trend line. We're going to wait because now the trend is down. All right. As long as it remains below this line, we're still good on this trade. Now let me show you what happens here, guys. Look how perfectly it's going to stop right at it. it turned right on this line. So what I'm showing you here is once you draw a line on a chart, it stays on there forever. All right, you don't remove it. We're going to talk about the rules of drawing lines soon, etc. Don't worry, I won't let you go alone. You're doing this battle with me. Look at our profits. You see our profits going? How is that possible? The stock's dropping, but we're making money. And I'm going to show you really what's important about this chart. Let me just go through it really fast and zoom out. If you do a very quick report, we're actually making a lot more money. Let's exit position. Let's run the report that you guys would think. Look at this. If you take the risk and you add in, we made $5,680 so far. All right? And you could have made more. It all depends on how you control your risk. And what I'm showing you right now, I'm going to actually cancel the simulation, but what I'm showing you is you're seeing and you've actually traded the 2008 financial market collapse, the crash as they called it. How crazy is that? We just made money together trading the 2008 crash in one lesson with a simple rule like the 1, 2, 3 line and trend. Look, we bought here, went up. It broke, we sold, and made all that money. Are you guys shocked? This is the collapse that everyone was so scared of. We just traded it profitably. That's how you would have traded in 2008. It ain't any different at all. The line that was supporting or the line that was the trend was broken. The momentum changed. The sentiment changed. The entire thing shifted. Psychology was now down. Why were people buying here and here? It beats me. I don't know. I can't tell you. When a line is broken, the sentiment changes. You don't trade against it. All right, that's your first lesson you're going to learn tonight. Okay, let's practice line drawing and trading with this. So let me just exit the simulation. We're going to quit. Does anyone have a stock that they like that they want to try the strategy on? I'm kind of putting myself in the spot because I don't know all the stocks in the world, but I'll show you in all honesty how it works. All right, let's look at actually the S&P 500, which is a market on its own. Here's a trend line. Remember I talked to you about trend lines? Here it is. This is something I drew in my live chart. 1, 2, 3. There's a support. You buy here, it's gone up. You're still holding. All right, isn't that awesome? Let's look at a stock that you guys suggest. Somebody said Ford. I like Ford. Let's go F. Here's your stock price of Ford on a chart. Okay, so do you guys want to trade it? All right, we'll do it. If you want to do it, we'll do it. Let's go to September 17, 2009, because that's where I want to show you. Actually, wait a minute. We don't have to go that far back, do we? Where are we at today? There we are. There's Ford. Here's a good example right here. All right, 1, August 12th. 1, first point. Second point, September 12th. October of 2012 is the third point. All right, so you buy at $9.50. It's touched that line 3 times. $9.50. All right, do you sell here? No, you don't. You only get a chance to sell here at $15.94. That's your sell zone. $15.94. Do the math. Less $9.50. You just doubled your account. You haven't doubled it. You've actually made 50% gain. Hallelujah. This thing works. And isn't it funny that once this trend line is actually broken, that's the precise moment where the trend just quits. This rise stops. That's why it's such an important line to draw. And this isn't something I've just drawn for you guys for tonight. This is something that I draw on my live charts all the time. Do you have any other stocks you want to look at? Facebook. I knew that was coming. Just didn't know how quickly it would come because we talked about Facebook a little bit earlier. Just give me one brief moment. Facebook. There's Facebook. In fact, what Facebook has done at the moment on this chart, you'll see it's a candle chart. All right, we did 1, we did 2, we did 3. We had an opportunity to buy it shortly here. Went up to $72. Broke the support line. Now we're getting out of Facebook. Okay, it's time to get out of that trade. So if you bought at 51, guess what? You're getting at 60. It's still $9. I know $9 doesn't seem like a lot, but what would you rather have? $10 with a 90% chance, or $100 with a 1% chance? What would you rather have? You would always go for the smaller amount with the higher probability, all right? Because that works out to be $9 expectancy. This works out to be $1, 9 times more. So don't get caught up in looking at stocks like saying, well, if I look in the chart, if I bought here at 22 all the way to 72, I would have made this much. All right, that's greed. You're looking at it as a greedy person if you're doing that. Nothing wrong with being greedy. Remember, be smart, be disciplined, be wise. Pick your opposite or your positions and opportunities. Okay, so let's look at another stock that's got a lot of critical acclaim. It's Apple. I want to take you guys back to the time when we talked about this collapse. This was during the foundations course actually that we were doing in April. This is one of the first classes that we did. We talked about this and we said, you know what, there's a line here. Look, 1, 2, 3. And we said that this line is holding the price up. It's a trend line. All right, and then we noticed something happen on Apple. We noticed it broke. Okay, and it validated the trend line. And then it started going up. And then an interesting thing happened. It broke again. I'll show you. Oh, sorry, I didn't want to do that. This was when Apple was riding itself up to around 650. People were going absolutely nuts. 700 was in play. And this broken trend line was broken once again. Look, 1, 2, 3. If you draw it, it broke here. And what happened, guys, is one of the biggest drops of Apple that we've seen. And we predicted that. We actually traded it profitably, and we saw it happen. It inflated our account happily. While people were sacrificing, or not sacrificing, while they were losing money, while they couldn't sleep, they were really mad we were making money. And that's not to brag. That's just to tell you what the opportunity is. All right? You cannot ride a trend up and suffer through this. Do not do that. Ever. Never sit through a drop like that. It damages your psychology. It really does. It's not good for you. Physically, mentally, or health-wise. You want to look at some other stocks. Throw out a symbol or two before we wrap up the lesson. We're going to go back and just look at some things as homework that you have before our next class. A few quick housekeeping items, and then we're going to cut you loose for the day. Any questions? Market Analysis Live students, by the way, some of you are going to ask. We're up pretty good. Pretty good trades this week. 2,516, I don't know, just that's a profit for one day, so we're doing well. Look for your midweek update on Wednesday. For those of you that are Foundations course students at the moment, if you are a Foundations course student, for level 2 and 3, you get Market Analysis Live free as well during those 2 months. All right, so that's an added benefit. We'll talk about that later on. Don't worry, right now, just take up those 8 lessons, absorb them, learn them, and you'll see how amazing the transformation is. You're going to be trading profitably in just the next month in your demo accounts. Okay? All right, let's look at one last chart. Somebody suggested, am I reading that right? ASX? ASX. What is ASX? It is Advanced Semiconductor Engineering something on New York Stock Exchange. Hey, ASX works. When did you trade this, if you don't mind me asking? And was it profitably? This stock is all over the place. Here's a perfect stock you don't want to be an investor of. You bought it at $4 in 2001. You've sat through a whole bunch of heartaches, difficult nights, sleepless nights, and now you're still only at 547. All right, you sat through all this. You don't want to do this ever. Basically, there's an opportunity to do this on the daily and say, yes, there is 1, 2, 3 at the moment. You can draw a line, sorta. It's kind of 1, 2. There's no 3 yet. We'll see what happens with the price. If it starts turning here, then we'll call that 3 and we buy at around $5. Do you understand what you're doing when you do a line like this? You're actually trading momentum. That's all it is. If you can't draw a line that connects, that means there's no momentum, like here. And do you really want to trade this? Do you really want to buy or sell? There's nothing happening. It's just going sideways. That's why if you could connect the line with 3 points, you're actually trading momentum. And you want to trade momentum. Unfortunately, there's none in ASX at the moment. None worth trading. You guys want to try any other stocks, symbols, questions, comments? Sure, somebody wants to demo. Well, it's getting kind of late. And sure, yeah, I know Home Depot's was one of those trades that Home Depot rather, we were trading ourselves as well. Very profitable. The trend line is off, I know. There's a reason for it, but there you go, 3, 4. It held this trend line all the way through from $28 all the way to 76. So I know about that one too. There it is, I graphed it, and then it went sideways for the longest time, and that's where we are now. In fact, we're riding some positions downwards. So when I say you could make money to the downside, here's a prime example. I'll give you an example right here. Today, it is the April the 7th all day long. Our trigger was at $78, and we got into a position saying if prices drop, we make money. So how much money did we precisely make on Home Depot? Well, $1,610. Okay, there you go. How's that possible? Price is going down, but you're making money. We'll talk about that. I'll teach you that in lesson 5. Okay, any questions so far? Comments, concerns, emotional breakdowns? You started out not knowing what trading and technical analysis is, and you ended up in one single webinar with a small strategy or a stepping stone to profitability. So congratulations, you guys have done a fantastic job. If you understand all of this, then you'll by no means have trouble getting through the course. All right, and if you don't, there's no problem as well. For next class, what we want you guys to do is review the Foundations course workbook. Remember, repetition is the result, and really the teacher is repetition. All learning is done through repeating, reviewing, and redoing things. All right, to complete the online quiz, if you don't remember how, I'm going to show you once again. You go into here, sign up for the website first and foremost. One second. If you're not a user already, you should become one. It's free, it's easy, and you get access to all this stuff. On the member area, Foundations course, quizzes. I know it doesn't look pretty at the moment. Level 1, Lesson 1 quiz. You get in here and you start doing it. Traders usually buy stocks and hold a position for several years in hopes of making a profit in the long run. Is this true or false? Let's say false. Well, it's right. There you go. You go through the quiz. It helps you solidify your knowledge. I strongly suggest you guys do these. Sign in. Have a crack at them. All right? Also, I want you guys to go out there and look at some stock charts on your own. You have to go out there and observe these things. If you just listen to me blab about them, it's not going to help you understand them any more than going out and doing it yourself. So here is a place you can go and do this. Okay, freestockcharts.com. Now they load. There you go. You could look at charts. I know this is a little complicated. There's also another one called stockcharts.com, and it's probably a little more simple. So what you do is you go to this website. It says enter company name, and let's say you like Google. Well, you could type in Google here, and it'll give you an option. Just click any one of them. It doesn't really matter at this point, and you see a chart. Okay, so what I want you guys to do is use the site, start drawing trend lines. If you have any questions, if you want to take a screenshot of what you're doing, write some notes and email it to info@TRADEPRO Academy. We'll help you understand this stuff. We're here to work with you guys. All right? So do that. That's another resource, stockcharts.com. Another thing that I forgot to show you, actually, on the member area, if you go under free resources, this is where you'll see a lot of the charting. All right? One of the best ones that I love is TradingView. If you go to TradingView, let me just clean this up very quickly. You see stock charts, technical analysis, all kinds of crazy stuff, and it all starts with just typing in something like Apple, let's say. It gives you a free chart. Look at this. You could click it, drag it, move it. If you want to pretend to trade, here's how you do it. Basically, you come in, draw yourself a line. You use this line tool up here. All right, you click one point, drag it. Is there 3? No, there isn't. Well, now you move it. Just click the chart and drag it over. It'll move with you. You see that? This is 3. Now you buy. Well, you got stopped out. See? So use it like that. This is a great tool. I want you guys to practice. I'm showing you how to access something that's absolutely free. You don't have to pay for these charts. Just go out there and do them. It's a pretty awesome website too. You can share it. You can take a screenshot. Where was the screenshot? I think you could draw on here a bunch of stuff. Just go crazy with this. Learning through doing. That's what it's all about. Another thing I wanted to show you is the stock charts I already showed you. Virtual trading will leave. We're going to go through all these links at some point or another during the course, and I'm going to show you how to get the tools you need as well to help you with your trader development. All right, so for now, go into the member area. You can go in there and watch the Foundations course archive if you've missed it. You can do the quizzes. You can review the workbook. Let me give you an idea of what the workbook looks like very quickly before we round out this lesson for tonight. Here we go. We're going to let it load. It's a big workbook, so I take some time. There it is. Uh-oh, did I break it? Probably not. Here's the Foundations course workbook. All right, if you go through it, you'll find out why it's so lengthy. It's actually going to take a while to load. Just give it a second. You're able to actually print it. It's 82 pages. We allow you to print it. Here it is, level 1. For the Foundations course students at the moment, because it's the trial option, you're only going to have the workbook for level 1. But you go through, you look at what we talked about tonight, bar chart, notes. Go crazy with this stuff, guys. It's all for you. Okay? Any questions, comments, or concerns at this point? I want to wrap it up with a few quotes for you guys. Motivation is always good. All right, here's the first one. Nothing can stop the man with the right mental attitude from achieving his goal. All right, but nothing on earth can help the man with the wrong mental attitude. Thomas Jefferson, very deep quote. All right, if you have the right attitude, if you want this thing, you can get it. I promise you, I've put this course together to teach you how to trade from the beginning to the very end, the ground up. Traders aren't born, they're developed, they're disciplined, they're conditioned. All right? Next quote, success is a sum of small efforts repeated day in and day out. You guys are showing up to the webinars, you're putting in the effort. Now just go out there tomorrow, look at the chart, draw some lines, understand what we talked about today, review the material, do the workbook, have a look at the quizzes, do all this stuff. It's all the small collective efforts that make the big difference at the end of the day. All right, it's that simple. All right, guys, that's all I have for you tonight. If you have any questions, comments, or concerns, now's the time to ask them. The next time we're going to get together is on Wednesday, same time, same channel, 10 to 11:30. What are we going to be talking about on Wednesday? You might be curious. I will fulfill that curiosity for you. We're going to start doing an introduction to equities. What are equities? What are stocks? How do we buy them? How do we short sell them? All right, who buys stocks? Why do they buy them? How do they profit? We're going into those details. We're going to start going to the nitty-gritty. The introduction's over. We're going to start picking up the pace. If you guys stay with me, good things will come, and you can only fail if you give up. All right, so I'm going to send you guys the link for Wednesday's webinar much sooner. I'll send it to you during the day on Wednesday, so you have a chance to register in the morning if you want to, and we'll start again at 10 p.m. If you have any questions in the meanwhile, you send us an email. We're here for you. Never hold back. Always send your questions, comments, or concerns. Anything we can do to help you, that's what our team is here for. All right, guys? So if you don't have any other questions, then have yourself a fantastic evening. We'll see you on Wednesday. We're going to pick up from where we left off. I hope you guys had a great time. There's a lot of money to be made. Take care, guys. Have a fantastic evening. Good night, and thanks a bunch for attending tonight. Oh, as well, if you want to invite some of your friends that are interested, go ahead. It's not too late. We'll be picking up at a pretty easy pace as well next lesson before it starts really picking up in lesson 3. You guys have a fantastic evening. Sleep well. Trade well, live well, eat well, and we're going to profit well together. Goodbye to everyone, and we'll talk soon.